Good evening. This is Prina Khan here from Sunah Ventures. And thank you all for stopping by to check out the latest installment on my buyer's education webinar series. With step one, or the initial session, we talked about the buying process at a very high level. We then went into the next session where we talked more about the actual financing, what your options should look like. And then part three, we talked quite a bit about really leaning on your team. That includes not only your agent, but your mortgage lender. It also includes your attorney and any other people that you have on your team, whether it's a contractor or a title company, etc. So today, I want to talk about a topic that's been coming up, not only with my colleagues, but with buyers alike. I have some buyers that have gotten their feet wet and bought their first home, and now they're looking for either a second home or an investment property. So before we get into that, just wanted to tell you guys more about me and why I do what I do. So Sunah Ventures Real Estate is a boutique agency that works with buyers who are new to home buying, who have lots of questions. We love questions, and who really want to have a partner, an agent that takes a consultative approach. Myself and my team, we work very closely together. There's about 100 agents altogether on my team that I can rely on. And along with that arsenal of agents, there's contractors, there are referrals for attorneys, inspectors, and everything in the gamut that anyone could need when buying a home. Why did I get into real estate? Well, it's one of the things that I'm really passionate about. Going through the experience myself, buying my first home, and realizing all the gaps and things that were missing in terms of servicing that my agent provided. And not that she wasn't great. She was really a nice woman. I enjoyed working with her. But it was all self-education for me. And it would have been great to have an agent to really take the time out to explain what different terminology might be, or how one thing could mean something to a seller and it means something else to a buyer, to understand the importance of making sure my inspector does his due diligence, being a little more creative and educated when putting together my offer instead of just coming up with a number that sounds interesting. So for all of those reasons, and because I want to stay focused on the average working family, if that's a single person with a pet, if that's a single parent with 2.5 kids, if that's, two partners, regardless of sex, who are starting their lives together. But really, I'm looking to help, the average working person that just needs that little bit of hand-holding, education, guidance, consulting to get them to realize their dream. All right, so you guys know who I am. My name is Prina, and I'm going to go ahead and get started. So I'm going to be sharing my screen today and go through a topic, as I mentioned, that has been really a hot topic, I'd say. It started out with my colleagues, and a lot of my clients have been asking as well. So we're going to talk about investing. So today's agenda will be pretty brief, but we're going to talk about the buyer's process overview. You guys know, if you've attended my webinars before, that's my foundation. I like to make sure that everyone understands what the process looks like and the seven steps that are included. Now, if you're investing, it's going to look a little different, but foundationally, it's pretty much the same. The next thing we'll talk about are investment types. This is going to look a little bit different than when you're buying your first home or your primary home. When you're buying your first or primary home, there are other options that aren't available if you're looking for a second home or investment property. And we'll get into that. And then finally, we'll talk about investment types. If it's going to be that two-family home that you rent out, or if it's going to be a single family home. Are you looking for multi-unit? Are you looking for an apartment building, shared space, commercial, residential? There's all different options that are available, provided you have the cash and or means to make it happen. So let's get into it. The home buying process, I like to keep it simple and share these 7 steps. So first of all, you make the decision to buy your home, or in this case, your investment property. Great. You're on your way. Hopefully you're working with myself or someone on my team. But if you're outside of the state of New Jersey, definitely feel free to contact us. We work with agents all over the country. So you have a fantabulous agent that you're working with. That is great. The first thing you want to make sure is that agent is providing that consultation with you. And that can last anywhere from 15 to 45 minutes, depending on what you're looking for. During that process, you want to make sure you put out all your requirements, your needs, what your profile looks like, finances, location, size, intention, etc. Your agent is going to hopefully come to that consultation with questions as well. And if you need referrals, have referrals on hand to kickstart the process. And once you have an agent that you like, that you mesh well with, the next step in the process is getting pre-approved. Now, this is going to be a little bit different when you're investing, depending on what type of investment. If you're looking for a second home, a summer home, a beach home, then sure, you may want to go with that conventional loan for that second home, in which case you want to come up with a pre-approval. So whether it be the company that you have your initial mortgage with or a different lender that you'd like to try, you want to have that in hand and really understand what your budget looks like and make sure you have a clear expectation of what that home is going to cost you, so you can budget in all the necessities and also keep a slight budget for the surprises. You want to look for your home. Again, if you have an area in mind, maybe it's a beach home, maybe it's a home that's a little bit further out where you have more land, maybe there's a lake nearby. Whatever that requirement looks like, whatever that location, it's important that you share that with your agent as well. Your agent will be not only actively and proactively looking within that area, but also tapping into their networks, also tapping into some of the technology that agents have, so that we can do and generate automated emails with new or coming soon listings. If that area changes, the region, specifics, if it's now going to be a beach house versus just, a summer home, always keep your agent abreast of those changes so that we can adjust accordingly. Once you find the home that you're interested in, again, it's going to be a little bit different if you're investing. You may find a home that's multi-unit. You want to know more about the tenants that are there, what the options are. Are there leases involved? Are there security deposits at play? What's the tenant history? You may want to have your agent write in some kind of language that requires the current seller provide that background. If there's information on deposits, if there's a history in terms of payments or any background data checks, etc., you want to proactively build that into your offer and make sure that you have access to that information. And if not, your agent and your attorney can advise you to other options or means to gather that information if it's not readily available. And always do your due diligence. If you want to look into a multi-unit property, then make sure that you're looking at the listing information, have your agent provide you with the customer facing MLS sheet, which will give you all of the background from square footage, how many days that listing has been on market, what type of sewer system you're looking at, estimate on taxes. It will give you all of that information, will confirm the type, if it's actually a two-family. Little tricks that I always share. One of those tricks I'll share with you guys here. In the state of New Jersey, I think it was in the last 7 years, there was an update that a new requirement where when you buy or own a multi-unit building, let's say a two-family, you would have 2 meters. And so the one thing that didn't address was, what about the common area? If you have a tenant on the first floor and a tenant on the second floor, who covers the fees for the lighting in the hallway or the backyard or the driveway or the exterior front door? And so now there is a requirement to have 3 meters. So if it's a two-family, 3 meters. If it's a 3-family, 4 meters, and so on. That's actually something I learned from my broker not too long ago. And it's something that I pass along with my buyer clients that are potentially looking to get that first investment. It's one of those things to look for that agents should be looking for and advising you on as well. And then lastly, close on your new home. Again, if you're an investor, this process is going to look a little bit different in that there are other steps that are involved, and that's not quite the end all. If you're looking to do a wholesale buy and then flip, you definitely want to close on that initial property, but the excitement comes when you're able to find a buyer for the end product or the updated home. All right, so now that we have the foundation in terms of the home buying process, I want to leave you guys with something. I attended a master class about 6 weeks ago. And one of the areas that the instructor covered were short-term rentals and investment properties. And one of the rules that was shared during that master class is the 1% rule. So if you are buying a short-term rental, a home, a condo on the beach, you always want to look for pricing that will make sense with that 1% rule. So if you pay $100,000 for your condo or for your beach home, you want to make sure you're going to be able to rent it for at least $1,000 a month. That's just a surefire, quick way to know if that property is actually going to be lucrative and make you money. Now, that's not a hard and fast rule. Depending on the location, depending on the state, depending on what the market looks like. Is it a seller's market versus a buyer's market? Is it hot? Is it cold? Is it in between? There are a plethora of variables that will affect that number, but it's something that I actually use myself as a new investor when I'm looking at homes. If it's a home that's 500,000 and the estimates are saying, hey, you're going to get 3,000 a month max, then that might not be a home that I'm looking to purchase. However, if you have different reasons, maybe it's a home where you'll rent out short-term part of the year and enjoy for the other part. And in that case, it might be worth it. But definitely a good rule to have in mind when you're looking for your investment property. So next we're going to talk about investment types. There's buy and holds, which is more of a long-term if you're looking to take on the role as a landlord. There's wholesale and flip. Hopefully you have great networking in place and you know people who know people. You have contractors and all these people in your network that you can tap into, and cash. And then there's a short-term rental option. Think Airbnb, VRBO, which even through COVID, interestingly, we saw a surge in terms of local Airbnb availability or interest. So people were stuck at home, but they wanted to escape, change the scene. So they would rent homes down the Jersey Shore. right? For a month, even 2 months, especially with this hybrid or remote work scenario where folks can work from anywhere, but renting a home provided that safety in that you were still quarantining, keeping your family safe, not really around large crowds, but maybe that home had direct beach access, or that home came with a pool. So you did have kind of the outdoor element. And so it's definitely something to think about, definitely before COVID and in the post-pandemic world that we're living in. So I want to also talk about financing. This is going to be important because it looks a lot different than if you're just buying your primary home. The most important thing, cash is king. If you are fortunate enough to have cash on hand, then you have lots of flexibility and the freedom to make decisions on what type of property, if it's going to be a buy and hold, if it's going to be a wholesale and flip, or if you're going to hold on to it but use it as short term. If you are not as fortunate, or if you just choose to invest your money in other places and use other people's money, then hopefully you have a network where you can find a partner, maybe go on 50-50, or 25 times 4, and have each person do their part, or maybe just have, 2 or 3 other investors that are just investors with you. You'll go through the work, you'll find the opportune home, and then when the profits roll in, then you will divvy those up by 4 or 2 or 3 or whatever the number is. Hard money lenders are always great. If you have a network, if you have access to a network, if you know folks, typically the way that works is there may be a slight fee assessed on the loan itself, and then there's interest that's going to be accrued from the time that that loan is held. So as an example, if you have a hard money lender that's providing you, I don't know, 100 grand, and they're going to charge 5 points. That's pretty high, but I like to keep the math simple. So that's $5,000 just to lend you that money. And then, 1% or 2% interest over the course of 3 months. It would be the 105,000 times that 2% interest over 3 months. Now, what's important to note here is it's going to be critical that if this is a scenario where you're going to be buying and flipping, you want to make sure that you keep in line with your timeline with your contractors. If it's a home that needs to be redone or needs work, you want to really make sure that you've sat down with your coordinator or your GC, and that they're also on the same page in terms of timing, what needs to be done, and the estimate. So I'm going to go back just a bit. Now that you have all of that information, let's talk a little bit more about that, the second option, if you're looking to wholesale and flip. When you're looking to buy wholesale, you want to get the best price possible, and you want it at a wholesale price. Why? Because the money for you as the investor is going to happen once that home is made whole or the updates are made, and then you're able to find an end buyer to buy the finished product. And so one of the strategies that some partners might use, some of my clients use, is going after distressed properties or short sales. In this case, these are owners that found themselves in a predicament. It could have been the pandemic, it could have been a financial loss, it could have been life loss, it could be divorce, it could be change in family dynamic. Whatever the reason, these owners are at a precipice where if they're fortunate, they'll find a buyer to come along, and if the dollars make sense, they'll actually be able to put money in their pocket. And the idea is to find someone before it actually goes into foreclosure. Once a home has been foreclosed, the bank now owns it. That is now an REO, and there's not much the owner could do at that point. And it also is one of the worst things you can have on your credit report. That's like the credit terminator. It's worse than getting a car repossessed. It's worse than having, student loans that may have been paid late, it's worse than, having a couple of credit cards where your payments were late. Foreclosure on your credit takes quite some time to recover. But if you have a great financial planner, it can definitely work with you, but it's going to take time. So you're looking for that wholesale property. One other thing I'll share here is you want to look at the actual repairs that are necessary. And so you're looking for that number, that magic number. What we look for as agents or investors is the after repair value. So if the home is valued based on comps at 100,000, and then looking at those comps, they have slightly updated kitchens and baths. And all of those homes have a nicely manicured, landscaped front yard. You want to take that home that may be in a distressed condition and get it as close to that as possible. So you're going to want to bring in your GC and have an idea of what that updates, the updates to the kitchen will require, the bathroom, and the landscaping. And once you have that information, that number, let's say it's $20,000, again, I'm making up numbers here, you want to apply that to what the actual cost would be so that you're actually buying the home at a number that incorporates the repairs. So if the home is worth 100,000 and you spend 100,000 for it, it's probably not going to make sense, because once you put in another 20,000, you're now 120,000 into this home, and you're probably not going to be able to sell it for that amount. So it's a very tricky and I'd say a very detailed process if that is the strategy that you're taking. And then for the short-term rental, that's pretty much what it is. If it's a home or condo, typically somewhere that people may like to vacation, maybe, it's near the mountains, if, there's a ski area, or it's near a beach, if it's in the South or on the East or West Coasts. So short-term rentals are pretty much the same thing. You have a little more flexibility. You still want to look at the comps, and it's possible to mix that strategy and go after a distressed property that you then put the repairs into in order to make it a short-term rental. And you can work with your agent that will provide that guidance in terms of what numbers you should be looking at, providing those comparables, and working with your general contractor to make sure you have an understanding of what those costs are. That's a lot, and it's really exciting. It's a little daunting, but if you do it right, it is a way to create generational wealth and additional lines of income. It's a way to find that financial flexibility and freedom, that financial burst that you need to put those kids in college, to make sure that your parents are retiring comfortably, and to set yourself up for your own retirement. So it's definitely an option. If you're looking to invest, definitely think about those options and talk to your agent. If you don't have an agent, please get in touch. I'm Prina Khan, again, with Sunah Ventures Real Estate, and we're powered by Exit Platinum Realty. I have many folks on my team. If there's a preferred language, preferred area in New Jersey, happy to connect. You can find me at Prina Real Estate, or you can find me at www.sunahventures.com or www.prinarealestate.com. And I would be happy to provide a consultation at no charge. So I hope you enjoyed today's session, all about investing, a lot of information. So if you want to know more, reach out to myself or my team, and we will be happy to work with you and provide that guidance that you need to take your investing business to the next level. Until next time, thank you guys for joining, and have a great day. Bye, everyone.